May I please now call on stage Andrew Naylor, Head Middle East and Public Policy World Gold Council, Murali Malayappan, Chairman and MD, Shriram Properties, Pankaj Razdan, Founder and Chairman, Vivanta Capital, and Feroz Aziz, Joint CEO, Anand Rathi Wealth. In fact, to moderate this panel, I would request Karthik Malhotra, Executive Editor, Business News9, to join us here on stage.
Thank you, Sakshi. Gentlemen, good evening. Thank you so much. It's a pleasure to meet all of you here in Dubai. May I request you to please take your seats. Good evening, Dubai. Wonderful to be here and wonderful for all of you to have joined us here. And of course, gratitude to our esteemed panelists to be here with us from different parts of the world. And it's really a pleasure to be in the city of gold. And let's actually start talking about that perhaps to begin with. So, just a little trivia here. On an average, I think most people on this panel, I know for sure Feroz Aziz will definitely say that the way to investing has to be through equities. Equities in the last 1 year, correct me if I'm wrong, Feroz, has given returns of about 9% on the NSE. Any wild guess on how much gold has returned in the same period? If there's anybody in the audience who wants to hazard a guess. Well, it's a fairly stark number. It's about 39% or so. And cryptocurrency has given almost double those returns. It's about 60% return in the 1 year period. We'll come to 5 year and 10 year periods also. But before that, we have the president of the World Gold Council here with us, Andrew Naylor. Thank you so much for being here with us. We're in the city of gold. Give us some golden words about how hot is gold right now? Is it going to get any hotter than this?
Yeah, it's been a stellar year for gold, but it's not just this year so far. If you look at how gold has performed in the last few years, particularly last year, where we saw the start of all-time highs. Number of factors driving this, and it really goes back to the uniqueness of gold. There isn't another asset class like it that has this unique and diverse demand profile. So you have jewelry demand, which is about 33%. Central banks, which is the big story, is about 20% of demand. 40% is investment, 7% is tech. These sectors of demand have very, very different drivers, and they perform very differently in the same macroeconomic situation. So some are pro-cyclical, some are counter-cyclical. That means gold performs differently, and that's reflected in its lack of correlations. And it's that lack of correlation and its diversification properties that is leading to a lot of investment demand, and it's investment demand that is driving gold's performance, certainly in the last 18 months.
That's right. And in fact, if you were to believe the estimates of Goldman Sachs, it says that perhaps this time next year, gold could touch as much as, what, $4,000 an ounce. So I think the question one wants to ask here is that maybe we haven't really missed the bus on investing in gold. So Andrew, horizon, $4,000, those who haven't invested, would you tell them this is the time to buy?
Well, if you look at gold's performance historically, it's generated about 7–8% average annual return. Since 1971, we came off of the gold standard. We at the World Gold Council believe it's a strategic asset. We don't advocate putting everything into the gold bucket. It's a diversifier. But as a well-managed, diversified, risk-mitigating portfolio, gold plays a role. And the optimal allocation can vary, but just as a very, very ballpark benchmark, we reckon around about 7 to 11% is an optimal allocation for most portfolios, but it does very much depend on your portfolio, of course.
Right. I think there are a lot of external factors which are going to eventually drive prices one way or another. But I want to bring in the contrarian view that I'm sure my friend Feroz Aziz has here. He's never really been bullish on gold as far as I remember our previous conversations. Feroz, what is the way forward for people to get rich? At the end of the day, I think any investment you make, the ultimate goal is to, I know you'll talk about goal-based investment, but the ultimate goal is to get rich. What asset class should one choose?
Good afternoon, Karthik. If you rightly summarized, I've not been extensively bullish on gold. In fact, at times been bearish on gold. One of the longest times to say that and acknowledge that. Because I think gold can't fight equity. It can surely fight debt and wins hands down. In my portfolio, there's no debt. I did a survey of my colleagues who are 382 wealth managers. Only 2 of them had any debt. So the point I'm trying to make is wealth managers don't buy debt. Clients do buy debt. If they buy debt, I still propagate half of their debt investments could always be gold. It depends on where you're sitting. Where you stand on an issue depends on where you sit. I sit in a place where there's no debt. So gold has very little relevance. And like you said, Karthik, the past performance of gold as we speak today is astronomical, right? 39%, right? That's mouth-watering. But that's where textbooks say, buy low, sell high, but our heart always makes us do the opposite. So I would see the 39% with skepticism, or at least look at other data. Sorry, I have a piece of paper because there's a lot of other data.
Let's hear it.
Okay. So we said, let's go back 1996 and do a 3-year rolling return of gold. Every day, every first of the month, if you bought gold and sold it subsequently in the same month after 3 years, what would be the return you would make? And different investors, if they did this, what was the average return? The 3-year rolling return of gold from 1996, I'm now speaking in rupee terms, of course, not so relevant for an audience.
No problem. All our audience watching this live in India on News9 will be familiar with the rupee. Go ahead.
Wonderful. So that's 9.63 average return, 3-year rolling. And there have been pockets of supernormal returns, but the 3-year returns has been 9.63, and the same corresponding for equity has been represented in the form of Nifty again, Indian index, is 12.05. So now this is the return ka aakada, as you call it in Hindi, right? Number. Risk also has to be measured numerically on an Excel sheet. You can measure something called standard deviation. Very simple nomenclature, tells you how much swing in this number. The standard deviation number for gold is 6.27 for the 3-year rolling return. And for Nifty is 4.88. Sharp ratio, which is the risk-adjusted return, is 0.54 for gold. And for Nifty, it's 1.24. So on a risk-adjusted return basis, numerically, Excel sheet can't say anything different if you did. So it is twice more efficient on risk-adjusted basis. Equity is more efficient. That's one way.
Right.
One more piece of data. I'm so sorry, I'll bore you with this.
No, let's hear you.
Then I said, if I'm an investor, what am I interested in? Forget the standard deviation. It's too technical, right? Why the hell am I interested in that? I'm being a devil's advocate argument to my own theory. I said, yeah, I want to make at least double-digit returns in rupee terms. If I lend to government of India, I get 6-7%. If I'm doing all this tamjam, should I at least get double-digit returns? So we checked the probability of double-digit return in gold for a period of 5 years is 49%. For 7 years is 29%. If a 10-year probability of gold giving double-digit return is 13.53. So the probability of getting double-digit returns with longer holding periods is lower. I again repeat, in equity, if I hold it for longer, my chance of getting double-digit return increases. In gold, if I hold gold for 10 years, my chance of making double-digit compounded return reduces, 13.73. Right. These are the reasons why you should not have recency bias. But I agree that gold can beat debt hands down.
Right. I think no doubt on that. Debt is an instrument which is much safer, and hence a low risk, low reward sort of an equation comes into play. I want to bring in Pankaj Razdan now. We've heard from the president of the World Gold Council, and we've heard with somebody who is a self-proclaimed bear on gold. You've been in the asset management business. What is your view?
I'm not going to be judgmental on either one of them, but I think if I go by the theme of what you're talking about, I think most of these asset classes, they over a period of time, they mature, and the arbitrage becoming less and less in making money. Equity is the only underlying driver because it's directly linked to the prospect of growth of the businesses and economy. So what is equity? It's ultimately the reflection of your economy. If your economy does well, it will start reflecting back over here. But I think we are in an interesting time. We can't ignore any of those things. There'll be a time gold will give return to you. There'll be a time gold has to be part of your asset allocation, though practically, like Firoz, if you ask me, is zero. Unless my wife has bought something, I don't know. But I'm a hardcore equity. But today's interesting time, you are seeing new alternate investments emerging like gold. Gold today, I won't really call it as an alternate because I think it's been there in the fray for a long time.
Of course.
Even equity was an alternate, by the way, when I started my career. Because it was people, a Bombay club, Bombay Stock Exchange, 50 brokers, they're buying and selling and making money. And for rest of the other people, the real investment was bank deposits and land. Similarly,
we will come to land as well. I'm sure Murli is waiting to come in on that. But go ahead, complete your thought.
So I think, but today's time are very interesting. I think the alternate assets are emerging very fast and very different. They are happening because there are financialization of an asset. Very easily, most of the assets are monetizable today. There has to be a huge pressure on building alpha. I mean, you can't build alpha in gold or some of the asset, but new assets are building alpha. And third, you're able to get some of these new assets into the mainstream. It leads from a discovery. When you discover, a lot of institutions start putting money. When the institution put money, it becomes more transparent. When it becomes transparent, become more liquid. When it becomes liquid, it becomes democratized. The way equity has happened. So now you will see an emergence of, I think before this panel, she was talking to them, LLM. I mean, LLM was supposed to be something to benefit an AI. Tomorrow you will be investing in that IP, cryptos. So I clearly see that alternates besides gold and besides equity are the time for the future. And some of these assets are going to become seriously big and seriously a very high impact part of your portfolios to come right now.
Right. We will try and touch upon cryptocurrencies also. And I know Andrew has a view on that, especially in the context of comparing gold and crypto. Well, both by some metrics being perhaps safe haven investments, not directly linked to everything else that we see with national growth, etc. But before that, Murli Mariyappan, if I can bring you in, sir. Real estate, again, look at the skyline of Dubai behind you. I mean, you're sitting not just in the city of gold, you're sitting in the city of real estate. And many believe, even today, especially people of my father's generation at least, that perhaps the best investment over time still happens to be real estate. You look at data over 20 years, 30 years period, eventually it tends to converge at a time that all asset classes give you almost the same return. So is there a real right or wrong way of investing if over a long term, your return is almost similar no matter what the risk or the reward?
We are in Dubai now. It's a India-UAE Global Summit. If you look at both the countries, the biggest driver for growth is real estate. Urban
in fact, the maximum FDI which UAE has attracted last year happens to be real estate.
Absolute. Real estate, I'm a real estate developer. Consumer, both you need to look at. As a real estate developer, you just don't build homes. You also build good karma. We all Indian believe in earning good karma. By building homes, providing shelter to somebody, you always earn good karma. Gold doesn't give you. Gold gives you a lot of jealousy. So, whereas real estate gives you good karma. Right. So if you're in India, you should look at real estate big time. If you're in Middle East, you should look at real estate good time because, again, by doing real estate, you fulfill the desires of so many consumers. The consumers are going to bless you. Now, with respect to returns, if you look at,
that's a nice way for somebody who represents real estate to tell you to buy more property, right? Good karma. Go buy more houses.
Unless you don't believe in good karma.
He's a great marketing genius,
Absolutely.
Actually. He must have touched the chords of everybody sitting out here.
We have a panel on building brands. Maybe you should be on that one as well.
If none of them want to build a good karma, their choices. So it is everyone's personal choice. He also gave data on gold and both of them kind of picked up each other on the return. If at all you look at the best return, also you know that what you're doing. See, equity, I'm seeing now good amount of people chasing equity in India today. And 95 to 98% of them, they don't know what they are chasing up to. It's a herd mentality. If there is a small nosedive, the biggest sufferers are the people who do not know anything about it. They are all just driven by animal mentality. Now, if you look at real estate, they know what they are buying into.
Right.
And they make good returns there. That's where if you look at the growth for the last at least about 8-10 years, the kind of growth every city which has witnessed is a tremendous growth. And people have made tons of money in the last 10 years. Everyone has made money. Today, average Indian, middle class has become upper middle class become rich become super rich in the last 10 years. So all that money, all that wealth, and most of all the Indians, they all make money, but their boss is at home always. She understands real estate much better than anybody else. So real estate is the area one has to look at, and India UAE should look at how to collaborate with each other. See, we have seen tremendous growth of real estate, which built UAE what it is become now. So they should also look at something big time in India, collaborate with large developers and make a big deal out of it.
Right, no doubt. I think the objective of creating platforms like these is to encourage bilateral trade, bilateral partnership. But I'm still stuck on the karma part, because he's saying if you want to do good karma, you should buy more real estate. But I tend to agree with Pankaj. I think your karma ends if your wife does not see gold or you buying gold. That's the end of karma as we know it, don't we? Especially all the married men.
Yeah, when you buy too much gold, immediately you get jealousy from your relatives.
And jealousy, of course, sure. So again, I'll come to you, Andrew, in just a bit. But Feroz, I want to come back to you. At the end of the day, real estate and gold are very tangible. You can see them, you can touch them, you can feel them. But then there are also other ways of investing in them, which could be through gold ETF, which you can't touch, see, feel, or REITs for that matter. Right. So is there a real case for the regulator to come up with very clear, very absolutely fundamental level programs as the regulator, as the stock exchanges have worked in India to increase investor awareness on equities? Is there a real need to get real estate also equitized in that sense that REITs becomes an active way for people to invest in the real estate story, even if they don't have the money to buy Shriram properties?
No, you should buy Shriram properties also. That also you should do it.
Okay, we know, we've heard your marketing pitch, sir. But Feroz, is there a case for REITs to be more formalized in that sense?
Yes, Karthik. In my opinion, if you financialize a physical asset, the behavior of the buyer changes. Okay, that's one thing which you have to. This occurred to me, and then we made a 4P model. I had gifted my sister 1 crore of gold ETF. Okay, I'm just trying to say that financialization of a physical asset.
Right.
Last November, she calls me, can I sell a portion of it? I said, what happened? November, there was a fall, and she calls me and saying, I want to sell 50 lakhs of these. I said, have you ever sold any other physical gold you've had? She says, no. Itte bure din thodna hai. She said, and if I have to translate it, it's not such bad times that I'll sell physical gold. So what happened was, it was same asset, financialized, behavior of the same consumer changed.
Right.
Then came the 4P model, patience on one side. And if it is physical, patience is high. If it's not physical, patience is low of a consumer of an asset. Second, if you can buy and sell in parts.
Fractional investing.
Fractional.
Is that something the equity markets also need? Because you can buy a fraction of an Apple stock or an Amazon stock. But in India, we still don't have fractional. I mean, if I want to buy an MRF stock today, which is what, 1,40,000 or something, last when I checked, I can't buy a fraction of it. I don't have that kind of money to buy even one share.
No, in real estate, fractional ownership has come down big time.
You can buy the mutual funds there, but
of course,
you can buy one share. It's not. But I think fractionalization is the future. And sorry, I'm not cutting you out, but I'm adding to what he's saying. End of the day, financialization is the most important driver of change, of behavior. So most of these alternate asset, which looks very difficult today, any other future alternate asset, once the financialization happens, adoptions become much more clear in those stuff. So now, whether it's gold, whether it's real estate, probably whether it's going to be other assets like we are talking about artificial, and I'm very bullish on that because like LLM, probably I just give an example, could be decentralized way of blockchain infra, right. IPs. Not today there are IPs you and me can't even touch, but people are going to come and buy because all these assets, which are new assets, which have got a huge alpha, once you financialize them, then I think the growth will really happen.
Right. So I think, Feroz, if you want to complete your thought, otherwise I want to quickly jump over now to cryptocurrency. Maybe I'll just give you a minute to wrap up what you were saying earlier.
Yes. So point I'm trying to make is, if you financialize a physical asset, the behavior of the consumer changes and the behavior of the asset changes. REITs have been in India. I think the first one was launched in 2019. Embassy REIT was the first thing. The whole juicing out of the return was taken away. So capital appreciation was negligible. It was launched at 300 rupees. I think it's quoting at 370. Not too different. It's about 3-4% capital appreciation. So the point I'm trying to make is, when you wrap a physical asset, which is nothing but a dream, a person pays for a land parcel, which I was selling for a client. He's one guy saying, I'm going to build a hospital. There's another guy who's saying, I'm going to make an apartment complex. So what price you get for an asset depends on the dream of the buyer. When you're buying an apartment, the dream is curtailed to it's a 3-bedroom apartment housing 6 people.
Right.
So when you put a REIT kind of a structure, you take away the entire attribute of the asset out of the asset, is my submission.
Got it.
Now,
All right. So I think I'll just now quickly jump over to something that we've heard about, and perhaps, many of us who have come from India may not have dabbled into it as yet because it's still frowned upon. But here we are sitting in Dubai, and cryptocurrency is something which obviously is making waves across the world. I started this session asking a trivia on gold returns. I want to now flip it over and ask our audience if we know what is the kind of return that we've seen on crypto assets over the last 1 year. Well, I'll tell you 1 year, it's a simple number, it's just 60%. But do we know over the last 5 years how much have crypto on an average returned? If anybody in the audience wants to venture a guess, I'm happy to pass the mic around. But the answer is it's a solid 480%. Now, if I were to take that to the last 10 years, the return on crypto, ladies and gentlemen, the return on cryptocurrency has been almost 15,000%. So Andrew Naylor, I want to come to you. You live in Dubai, you live in the city of gold, and you also live in a city where cryptocurrency is so popular. Gold versus crypto perhaps is not really a debate which one does or indulges in too often.
It's a speculative asset, and it's not without risk.
Long term, 15,000%. 5 years, 480%. 1 year, 60%. Yes, it has seen its downturn, but every time it bounces back, breaks new records.
But based on what? There's no intrinsic value with crypto. And as you said, it goes up and it goes down. I mean, gold plays the role of a protective asset. It's a portfolio diversifier. It maximizes your risk-adjusted returns. Crypto doesn't. Now, there's a role for crypto, for sure, but it's not a safe haven asset. Gold is a safe haven asset because it performs differently to other asset classes, and it actually becomes more correlated, albeit inversely, during downturns, which is exactly what you want. So when your equity portfolio isn't performing quite as well, that's when gold comes into its own. But it's also a physical asset. So if you own it outright, you take possession of it, either constructively or in person, there's no counterparty risk because it's yours. You have legal title to it. It's also a very liquid asset. And actually, during the financial crisis in 2008, 2009, in more recent times, we have, at the peak of crises, seen the gold price dip. And people start questioning, well, is it really the safe haven that we thought it was? Well, actually, it was performing as it should. And that's an access to emergency liquidity when it's required, because it is one of the most liquid assets in the world. Over $220 billion, I think the latest figure is traded every single day. And so when things are less liquid in a time of crisis, it's gold that can give you access to emergency liquidity. And that's why in the initial stages of a financial crisis, gold tends to dip a little bit, but then it picks back up again.
Right. Okay, Shalini, I'll just take another 2 minutes. My director has been telling me to wrap up, but I can't leave this platform without coming back to Pankaj once. Pankaj, you were talking about other alternate investments, and the fact is, do we as humankind lay too much emphasis on intrinsic value that can be seen, felt, touched, and overall observed? Because at the end of the day, you're talking about PE investments. You're also talking about investments, in multiple other platforms, LLMs, for example, which you don't know what the outcome will be. It's not profits that you can see. It's not revenue that you can see. It's an idea that you're investing in. So are we making perhaps a generational mistake of laying too much emphasis on intrinsic value?
Yeah, I mean, fundamentally, money managers are taught like this, that the only way you can ever make money is when there's a misprice of an asset to its intrinsic value. And some of the assets are very clear. A flat at the Sheikh Zayed Road is going to cost you X dirham. If it is cheaper, you buy it. Similarly, in equity, we have been taught, now this is the earning, this is a P, blah, blah, blah. But when you come into a new idea like an alternate, an IP, how do you know what an IP could be an intrinsic value? So that's why some of these assets in alternate, you cannot talk to them intrinsic value because they have yet not been fully discovered. Like crypto, possibly for him, it's a very speculative asset because the end use, what he thinks are very limited versus me. I think this whole decentralized way of building your currency and commerce is the future. Why should I go and buy everything in dollar? Why dollar should be doing everything to me?
Right.
So I think the future would be basically in the decentralized thing. So believing our historical learning that every time you make money because there's a case of intrinsic value differentiation works in the most discovered assets. Non-discovered assets, you have to give a value beyond that. That's why they call it as alternate. So these are alternate assets over a period of time that discovered. Once they are discovered, as I said, financialization will happen, institutional investor will come, more liquidity will come, then democratization will happen, and then people will see the end value. I think same is going to happen whether it's an IP, whether it's crypto, whether it's LLM, whether it's AI, art, everything.
All right, gentlemen. Well, we are completely out of time. I'm just going to request my panelists, all of them, one by one, to just give us a simple one-line answer that at the end of the day, the objective is to get rich to make more money. How do you get more rich, Pankaj?
I don't recommend people getting rich. I recommend them getting wealthy. So stay invested for a long time.
All right, fantastic answer there. Get wealthy, not rich. Murli.
Just focus on building your enterprise. Take up an idea, like Swami Vivekananda said, live with that idea, make it very big. Just go behind your passion. You can create tons and tons of wealth in today's market.
Ladies and gentlemen, I'm feeling really small in this audience. There are such wise words coming, and here I'm just thinking about money. Well, I thought that was my job. Andrew.
Don't put all your eggs into one basket. Diversify.
All right. And last word to you, Feroz.
I think commonsensically invest in the fastest growing economy for the next 25 years. The next 25 years belongs to India. I can go on and on with 100 data points to prove that. If you don't have 50-60% of your wealth and your origin is in India, I think you're missing out for sure.
All right, so miss India at your own risk. That's the final word coming in from Feroz Aziz. Well, ladies and gentlemen, with that, we've come to a wrap on this discussion. Thank you so much, Feroz, Andrew, Murli, and Pankaj for being here. I think a fabulous discussion and a pleasure hosting you at the News9 Global Summit in Dubai.
And Mr. Malayappan, if I can just highlight while you were having the chat and you emphasized on real estate, there was a gentleman sitting right here. He said that your comments might make, women upset about the gold. Can I please request our CEO, TV9 Network, Mr. Vikram, to please join us here at stage and felicitate our guest. Joining us here at stage.